On October 10, 2025, global finance was rocked by President Trump's announcement, a moment that would send shockwaves through every corner of the world's markets. The news broke in the early morning hours, catching investors, business leaders, and policymakers off guard. Phones buzzed, trading floors erupted, and the world braced for what was coming next. The announcement was clear and uncompromising: a 100% tariff on all Chinese imports, effective November 1. This was not just another policy tweak, it was a seismic shift in the world's largest trading relationship, threatening to upend the flow of goods that touch nearly every aspect of daily life, from electronics to clothing to machinery. The news triggered a worldwide market panic, with investors dumping stocks and the S&P 500 plunging 2.7%, its worst day in 6 months. The sell-off was swift and brutal, as traders scrambled to make sense of the new reality. In just a few hours, billions of dollars in value evaporated from portfolios and retirement accounts. In a single day, $165 trillion in market value vanished, underscoring the fragility of the global financial system. The losses rippled across continents from New York to London to Shanghai as investors everywhere tried to gauge the fallout. The sheer scale of the drop was a stark reminder of how interconnected and vulnerable the world's markets have become. Investors scrambled for safety, driving up demand for U.S. Treasury bonds and sending yields lower. The so-called flight to safety was in full effect, as people sought refuge from the storm in the most trusted assets available. Bond markets surged, but the move also signaled deep uncertainty about what might come next. The dollar weakened, signaling deep anxiety about the future of U.S.-China economic ties. Currency traders watched nervously as the greenback slipped against other major currencies, reflecting fears that the world's two largest economies were heading for a prolonged and damaging standoff. This wasn't just a market reaction, it was a resounding vote of no confidence in the stability of global trade. Boardrooms filled with urgent meetings, and shipping companies began to halt or reroute cargo, unsure of what tariffs and countermeasures might come next. The tariff threat risked unraveling decades of supply chains and trade norms, with businesses and governments worldwide bracing for impact. Manufacturers faced the prospect of sudden shortages and rising costs, while retailers wondered how to keep shelves stocked. The uncertainty was palpable, and the sense of crisis grew by the hour. The $1.65 trillion loss became a stark warning of the devastation a full-blown trade war could unleash. Economists debated the long-term consequences on live television, while headlines blared the historic scale of the day's losses. Wall Street, usually bustling with energy, took on a somber, almost shell-shocked mood. For many, the question was no longer if there would be damage, but how deep and far-reaching it would be. Families, business owners, and workers around the world watched anxiously, wondering how their lives and livelihoods might be affected by decisions made half a world away. The events of that Friday marked a turning point, showing just how much power political decisions wield over the world economy. As world leaders gathered in emergency meetings and markets continued to reel, one thing was clear: the tremors from this announcement would be felt for months, if not years, to come. Trump's tariff threat was a direct response to Beijing's new restrictions on rare earth exports, 17 metals vital for everything from smartphones to missile systems. China controls 70% of rare earth mining and 90% of processing, giving it immense leverage over global tech supply chains. The new rules required foreign companies to get Chinese approval before exporting products containing these elements, effectively handing Beijing veto power over countless industries. The U.S. saw this as an economic weapon, threatening both national security and technological leadership. Trump also cited concerns over critical software imports, reflecting fears of China's growing digital influence. The 100% tariff was meant to force China's hand, but Beijing's move was seen as a strategic play to weaponize its dominance. The conflict now extended far beyond trade, touching the very foundations of technological and geopolitical power. Beijing wasted no time in formulating a response to the escalating tensions. Responding swiftly to Trump's tariff threat, the Chinese government made its stance clear. On October 12, China's Commerce Ministry declared it would not yield, vowing to take corresponding measures to defend its interests. The statement was firm and unambiguous. The message was clear: China would not be bullied or back down. The government emphasized its resolve to protect national dignity. "We do not want a tariff war, but we are not afraid of one," the ministry stated, projecting reluctant strength. This sentiment resonated deeply within the country. Beijing urged the U.S. to return to talks, but made clear it was ready for a prolonged fight. The stakes were high, and both sides were digging in. For China, giving in would be a national humiliation and a dangerous precedent. The government knew that any sign of weakness could have far-reaching consequences. With control over key supply chains, especially rare earths, China believed it had leverage the U.S. couldn't easily match. This economic power was a crucial part of their strategy. The standoff became a test of political will and economic endurance, with both sides convinced they could outlast the other. The world watched as the two giants clashed. The dispute had now escalated from negotiation to a high-stakes battle for global influence. The outcome would shape the future of international trade and power dynamics. America's soya bean farmers have been hit hardest by the ongoing trade war, which has upended the agricultural landscape across the Midwest and beyond. Once considered the backbone of rural prosperity, these farmers now face a crisis that threatens their way of life. China, once their biggest customer, bought over half of U.S. soybean exports in 2024, worth $24.5 billion. For years, this trade relationship fueled local economies, supporting not just farmers, but also truckers, processors, and small businesses in farming communities. Now China has halted new orders and slapped a 20% tariff on remaining shipments. The sudden loss of such a massive market has left American farmers scrambling to find new buyers. But few countries can absorb the sheer volume of U.S. soybeans. U.S. soybean exports to China have collapsed by more than 50% in 2025, making American crops uncompetitive. Silos are overflowing, and unsold beans are piling up, putting enormous pressure on storage and finances. Prices have plunged 40% in 3 years, squeezing farmers' profits to the breaking point. Many are forced to sell at a loss, unable to cover even basic costs like fuel, seed, and labor. Bankruptcies among U.S. farms have surged 50% this year, as rising costs for fertilizer and equipment compound the pain. Families who have farmed for generations are now auctioning off land and machinery just to stay afloat. Many farmers say, this crisis is worse than the 2018-2019 trade war, with no relief in sight. The uncertainty is fueling anxiety and frustration as communities rally together in search of answers. The Trump administration has promised aid, but details remain vague, unlike the $23 billion in support during the last dispute. Farmers are left waiting, unsure if help will arrive in time to save their livelihoods. Without a reliable market or clear government help, many family farms face ruin. The stress is taking a toll on mental health, as families struggle to pay bills and keep their homes. The trade war's human cost is now measured in lost livelihoods and abandoned land. Once thriving farms are falling silent, and rural communities are hollowing out as families are forced to leave. For rural America, the global conflict has become a personal catastrophe. The ripple effects are felt in every corner of these towns, from shuttered shops to empty schools. Farmers are left wondering if they can survive another season, or if the next harvest will be their last. The future of America's heartland hangs in the balance. The conflict soon spilled into shipping. The U.S. imposed new port fees on Chinese-flagged vessels, aiming to disrupt trade logistics and raise costs for Chinese exporters. China retaliated within hours, slapping reciprocal fees on American ships. Ports became the new front line, with both sides escalating tit-for-tat measures. What began as a tariff dispute now threatened to choke global supply chains, deepening uncertainty for businesses worldwide. The port fee standoff symbolized how the arteries of global commerce were being weaponized in this economic war. This isn't the first U.S.-China trade war, but it's the most severe. The 2018-2019 conflict saw tariffs and counter-tariffs devastate U.S. agriculture, costing farmers over $27 billion in lost exports. The government stepped in with $23 billion in aid, but the pain lingered. Now, the stakes are even higher. Tariffs are broader, rhetoric is harsher, and the fight extends to technology and national security. Each round of escalation has been more damaging, with both sides less willing to compromise. Without a breakthrough, this trade war could be the most destructive yet. The relentless escalation has frozen US-China diplomatic channels. Hopes for a Trump-Xi summit have faded amid mutual accusations and hardline rhetoric. Trump's confrontational language and China's refusal to negotiate under threat have deepened distrust. Neither side wants to appear weak, creating a dangerous stalemate. The diplomatic freeze threatens not just trade, but cooperation on global challenges like climate change and security. As trust erodes, the world's two biggest powers drift further into rivalry, with global stability at risk. October 2025 marks a crossroads for US-China relations and the future of global trade. The threat of all-encompassing tariffs and the market's $1.65 trillion loss signal a possible end to decades of globalization. The conflict now spans technology, security, and economic philosophy, making a quick fix unlikely. Businesses and consumers worldwide face rising costs and uncertainty. Yet the sheer scale of the fallout could force both sides back to the table. Only real compromise and de-escalation can prevent a prolonged economic crisis. The choices made now will shape prosperity and stability for generations. The world waits to see if its two leading powers can step back from the brink or plunge into a new era of division.